7 key factors for FY25 as we end FY24. The most important one, obviously, the election verdict on June 4th. The reason why it may not have as much of an impact if it doesn't is because it is probably already discounted. So that's one. But watch out for that. It's a big day. The second one, earnings growth. And if the pace of earnings growth comes off, it might be a problem for equity markets. So how do Indian corporates show earnings growth over the course of the year? The first couple of quarters in particular would be very, very important. The inclusion in the global bond indices, particularly the JP Morgan bond index slated to happen in June, is arguably the third most important factor for money coming in, bond markets, bond yields and the rupee. Also watch out for RBI policy decisions and in fact the US Fed rate decisions, and if indeed rate cuts are delayed, it might have a negative impact on the markets. If we see rate cuts, then it might actually be positive. Number 6, geopolitical events. If the skirmishes in Russia, Ukraine or the Middle East worsen, it might just have an impact of a risk off for world equity markets. And of course, the US presidential elections. Now, India is on sound footing with both the parties, so therefore may not have as much of an impact, but do keep a keen eye out for that outcome as well.